Okay, think today we can start on time. You know, sometimes software got issue, all these things, so there's a bit of delay. Never mind, I don't care. Okay, give me a while. Let me do a mic check. Then we can start. 9 o'clock. Okay, mic check, mic check. Final mic check and we start. Okay, I think we are good to go. We are good to go. Okay, so we will start in like what? 30 more seconds, okay? Hey, welcome everyone, welcome everyone. Anyway, I know it's a Monday. Always Monday blues. So I hope work has been fine and okay for y'all. I know Monday is always a tough day, you know. No, Monday must go to work, rush in the public transport, rush here, rush there. Then always Monday, the work very heavy. Wow, I know how it feels, man. Last time I used to work in the corporate world also for quite a number of years. Before I retired last year, I know how it feels. And I am with you, okay? I am with you. I know it's really not easy to be in the corporate life and really not easy. Weekend also sometimes must think about, But don't worry, I'm here to journey with you, okay? Be it your working life, retirement life, or your financial, okay? So I hope eventually we all can achieve financial freedom. Then you can decide whether you want to retire or work, or maybe work part-time. That one is up to you. So same thing as usual, okay? The stream starts at 9 p.m. Time zone is GMT +8. So we stream Monday to Thursday. And same, there's always 3 components to each stream. First component is talk about the stock market, specific stocks or instruments we are using, in general, market sentiments or any specific stocks. Second component of the stream is options, whereby we will talk about options trading, strategies, and then we will also dive into the market because market opens at 9:30. It's open today. Let me just double check, just to be sure. If I don't know, market is open today. Yeah, okay, pre-market. So market will open in about 27 minutes time. So usually second part of the stream, we will go into the market, identify any opportunities, and then we discuss some of the options we can sell or close. And all will be shown live to you. Okay, I'll show you all the options I make, closure, positions that are open, new updates, I'll share with you. And then lastly is a chit chat session. Okay, we just spend 5-10 minutes talk about some local news or talk about some fun stuff or just some things that could help us with our financial or something to consider. So I drink some water first. Sorry. Okay, so since last week we have discussed among ourselves that every Monday our stream will be less intensive. So today will be more a relaxed chit chat session, but still we have emphasis on the stock market because the whole idea of this stream is to talk about stocks and mainly options trading. So we will still dive into the market, but not so intensive, okay? Not like the past few days, like Tuesday to Thursday, we will discuss more in-depth, more analysis, more discussion. So today we have it more relaxed, okay? Because it's a Monday, and then hopefully next few days we talk more intensive. As weekend coming, hopefully we feel better. Then maybe it's more appropriate for a more intensive topic. So today more relaxed, okay? More relaxed, so you all can have a drink and then just hear me chit chat and then share your thoughts and views. So if you are here in the previous stream, feel free to say hi. I'm happy to see you all and say hello. Hey, good to see you all. Hey, Nurislam. Hey, Nurislam, hi. Nurislam. Hey, nice seeing you, Nurislam. I think you're first time here, is it? Or you first time chit chat with us? Hey, thank you saying hi bro. Good to see you there. Thanks. Oh, you best. Thank you so much, Nurislam. Hey, yeah, good to see you again. Hey, hope work has been okay for you all. And I hope that work wasn't too tiring for you. And hope you all had a great weekend last week, and that you all had dinner, more relaxed. So like I said, today's stream is more relaxed, okay? So not so heavy on the topics. And then I'll share with you all the upcoming plans. So we are starting now, so let me just change screen, okay? Okay, I put my head above. Okay, so let's start. Okay, so today I just want to, like I said, Monday moving forward is more light-hearted. So today I want to talk a bit more on ETF, okay, exchange traded fund. So I know most of you are seasoned about ETF, knows about it, but I know there's still a good majority that are quite new to investment and may not really know the benefits of ETF. So I know some people have this thought that ETF is just about diversification and giving you some broader sectors and giving more consistent return. But the benefit of ETF is more than that, way more than that we will discuss later. And also, a lot of new beginner, new investor have this misconception that, oh, I invest in ETF, very simple instrument, buy and forget. And because it's so simple, it's not an advanced instrument, it will deliver less return compared to those more advanced method like option selling, day trade, shorting the market, that kind. Not true, absolutely not true. I can assure you, ETF though is a simple strategy, like just buy and forget. Like buy a broad-based ETF like IWDA, VWRA, or even like CSPX or SPY 500. Even though it's just a simple instrument ETF, you buy and then you don't really bother about it and just keep buying, right? Likely, I can assure you, likely it will do better than 80% of the people out there. In fact, ETF performs better than 80% of the fund manager. That's the cold hard truth. Even Warren Buffett himself said that. So just remember, just because I only buy ETF, doesn't mean you are behind the curve. Not true, okay? Not true. In fact, you could potentially, in fact, not just potentially, likely, very likely, you are doing better than a lot of so-called investors out there. I assure you, okay? I assure you. It is very hard to do stock picking and option trading and be very consistently delivering more than 10% a year return. Most ETF, okay, good ETF like SPY 500, they can give you about 9 to 10% per year return. A lot of so-called self-proclaimed, not those very, very professional, those self-proclaimed investor, most of them, I assure you, cannot even give you 8 to 10% a year. They can't deliver that kind of return consistently over year. Even myself, okay, I want to admit it, I can't always get 12 to 15% a year. There are certain years I only get like 8%, which I will be better off buying the ETF. But of course, because I've been doing options a lot, I trade more, I'm more experienced, I take some risk here and there, I can get 12 to 15% more consistently. So just want to assure you, be you are a new investor or even seasoned investor, ETF may be a simple strategy, but it still can deliver pretty good returns over the long run. Okay, so I hope I clear up this misconception because some beginners feel that, hey, I buy ETF, I don't know those advanced things like you do, like option view strategy, am I behind the curve, it's so boring. I want to assure you, usually it's the boring strategy that gives you the best return overall, consistently. Okay, just being honest, just being honest. Like option view strategy, once you learn it and master it, it's also a boring strategy, to be honest. But it's because of it being boring and you have the patience, the dedication, that's how you consistently make money. Okay, so this is the first part about ETF. So it's a lighter topic, nothing very heavy today, okay? So I want to share with you why ETF is more than just diversification. So number one, think about it, if you are doing ETF, so likely you buy and then you leave it there. Maybe every month you put $1,000. Like this series, IWDA series, if you look at my shorts, be it from TikTok, Instagram or YouTube, every month I buy IWDA about $1,000, which is a global diversified ETF. So if you have others global diversified one, also fine, the return are pretty much similar. So this one is one IWDA only tracks developed countries like Singapore, US, Europe, Japan, that kind. Like China, it doesn't track, so it doesn't have any China stocks inside its component. But IWDA is domiciled in Ireland because of the tax treaty with US side. So as a non-US citizen, if I buy SPY 500, I'm subjected to 30% withholding tax, especially their dividends part. Whereas IWDA is not subjected to 30%, only 15% dividend. So there's a difference. So that's why I pick IWDA. So because, example, every month I buy this $1,000 IWDA series, I did it intentionally is to show that I put my money where my mouth is, and it's also to journey with you all, especially the beginners who are new to investing. I want to show you all that just buying ETF alone, like a simple instrument like IWDA, every month I just buy $1,000, regardless of the price. I don't think about it, I just buy. You can also do well, and I have shown you all the profits that I make. I think we are at series 7 already. I mean, episode number 7 or 8 already. So I've done it like 7 or 8 months together with some of y'all, journey with y'all, and you can see it does work. It does work. Hardcore truth. I show you a screenshot. It does work. So that's why if you are interested, if you are new, you can look at my series, then you can ask me questions. And then if you want to invest in the ETF, yeah, just call your local broker, depending on which country you are, then ask them for advice which ETF has the lowest tax, depending on your country. Okay, your different country got different tax rule. Then you pick the lowest possible tax and a good one, good globally diversified ETF, not those lousy ones, okay, or those risky ones like what, TQQQ or something like that, triple leverage QQQ, that kind. Pick something like SPY 500, CSPX, that kind, you are likely also will do well. Okay, so remember, let's say you buy ETF, okay, let's talk about some other hidden benefits. You buy ETF, you will literally spend like what? Once a month, I just spend like 5 minutes, to lock in and buy IWDA ETF and then close shop. That's it. Then next month, I find another day and buy, that's it. So imagine number one, the benefit you get is not just the diversification, all these things, or different sectors by buying ETF. Number one, you save time. Very important element. You look at me, I trade options, yeah, I get a bit more return, but imagine the effort and time I spend to do one DTE, weekly DTE, and I trade every day, 9 local time, my Singapore local time, 9:30 to about 4 a.m. So that's when the market opens and the market closes. So Monday to Friday, I do that, that's a lot of time spent actually. But ETF, you buy and forget, and that means you save a lot of time. And all this time, very important, all this time can be used to do other things, be it to work another job or up to you. But most importantly, the time that you save, that you have, can be used to spend on things like health, okay, staying healthy, having time to cook your meals, all these things. It matters a lot. And I assure you, health is a very important component when it comes to building wealth for investment. A lot of people forget that. Remember, when you have health, it means you will live longer. Not only do you save on medical bills in the older age, quite important, but the most importantly is when you are healthy, you are likely to live longer, maybe 90 years old or even 120 years old, as long as you take good care of your health. The likelihood of living longer is higher. And when you live longer, you are likely to compound your investment more over a longer period of time. And likely, I assure you, your returns will always be higher than anybody else, as long as you can live long enough and you invest in the ETF. So I give you a quick example. I give you a very quick example. Okay? Very, very quick example. So let's say example, okay, because you have more time, right? You are likely to live longer because you only invest in ETF. Okay? ETF only. So I have a lot more spare time as compared to more active traders like me. Or be even people who work very hard, like 20 hours a day. You only work like 8 hours a day, but you keep investing in ETF. So it's called the longevity strategy, in case you're interested. So example, I only invest $1,000 a month, only $1,000 a month, but I can do it for 100 years because I take care of my health. I don't spend so much time on the stock market. I only buy ETF. It's a fast-free, stress-free investing strategy, and maybe I also don't work so many hours. So only $1,000 a month into ETF. I compound it for 100 years. At the end of the 100 years, your net worth will be about 1 billion plus. 1 billion, okay, for 100 years. And your total input, total invested amount is only like 1.2 millions. Okay, 1,000 per month for 100 years is 1.2 million that you have invested. But at the end, your return is about $1.5 billion, okay. Whereas another person, okay, he works very hard, invest a lot, maybe do a lot of instruments, trade various kind of instruments. He can invest $5,000 per month. Okay, maybe his salary is at $10,000, then he do a lot of options here and there. Okay, yeah, very good, okay. He invests $5,000 per month. So maybe because he spends so much time on working and investing, he only can live up to maybe 70 or 80 years old. So his investing time frame, maybe let's say 40 years, let's say 40 years, okay. So 40 years, $5,000 per month invested. Let's say same thing, you get about 10% a year in the ETF. Classic example, okay. End of the day, the amount you get is only like $25 million. Okay, $25 million. But the total contribution you put in is about $2.4 million. Yeah, $2.4 million. So you see, the amount you put in is more than the person who only put $1,000 per month. But the end result, the return, is still lesser than that person. Okay, that person is like $1.5 billion over 100 years. Me, $5,000 per month, but only 40 years compounded, because maybe never take care of health, not enough time to take care of health, so die earlier, okay? So compound for 40 years, end return is only like $25 million. So you can see the difference here. It's just something for you all to consider that even though you may not earn a lot of money, okay, you work less hours, or maybe you only know about ETF, but because you got more time to take care of your health, live better, cook your own meals, don't eat all the outside salty, oily, high cholesterol food, ETF can still do very well in the very long run. Okay, so that's the whole summary of it. I just want to say is that just because you only know ETF doesn't mean you are behind the curve. Similarly, if you are an advanced trader, my take, okay, not financial advice, I remember, my channel is never about financial advice. I'm just a pigeon, a bird. So I speak bird language. So just because, doesn't matter you are seasoned or not seasoned investor, ETF is still a very powerful instrument that you should consider inside your portfolio. Even as a seasoned investor like me, I don't say I'm very experienced, okay, as a seasoned option seller like me, the view strategy, I still have ETF in my portfolio. Not only does it serve as a good backup, give me more diversification, more importantly, it doesn't take a lot of effort, it doesn't consume a lot of my time, and long run, very long run, it still can deliver very good returns. So just something for you all to consider, okay? So that's why the whole idea is that ETF is a very strong baseline, the base strategy that you should have. But you can then adapt and build on it to be whatever your lifestyle is, okay? Different people got different priorities, different life. They may want to grow their wealth faster, they don't mind taking more risks. But I would still suggest personally, ETF as the base. Then you add on other strategies to meet your life goals or the dreams you want to achieve. Like example, I give you an example. Like me, I don't like to sell stocks. So if I buy ETF only, where do I get income, right? So that's why I incorporate the option wheel strategy to sell options on my existing shares or sell cash cover put to get income. So that's my strategy. ETF, I still have it as a good base, but I do option wheel strategy on top. And because I want to build wealth faster, so I'm willing to take more risks also. So I do stock picking as well, like Apple, Microsoft, and Alphabet, that kind, or even Nvidia recently. So that's why ETF, regardless of any situation, personally, I think it's still a strong base to have, and then you just add on additional strategy you have. So this particular sharing is mainly targeted at new investor. Yeah, just because you're new, you only know how to buy ETF, don't worry, you are still doing very well. And if you're a seasoned investor, do consider ETF as one of your core portfolio, and then you add on other strategy. Because if one day your other strategies fail, ETF over the long run, like I demonstrated many years down the road, likely can not only recoup your losses, but give you higher return. Give you more than what you originally invested. Okay, so that's my sharing for ETF today. So I don't want to speak more, but I just want to highlight the hidden elements, benefits of ETF, which is really doesn't consume much time, and the time saved can let you stay healthy, okay, and give you time to exercise all these things. And remember, when you stay healthy, you have more time, and that matters a lot. So just remember, end of the day, time and health usually closely related, and they are core factors that you should consider and work on if you want to build a good and strong portfolio in the long run. Okay, Ken, that's it. Okay, yeah, so that's all for the ETF today. I won't speak further. We will move on to the options component soon. Okay, let me chit chat with you a bit. If you have any questions, feel free to highlight in the chat, okay? Feel free to let me know. I will try to respond to all the comments. And if you were here in the previous stream, feel free to come in and say hello, okay? Feel free to say hello. Okay. Hey, Azam. Hello, Azam. Nice to see you. Hey, thanks for dropping some smiley face. Okay. So like I said, if you're here previous stream, feel free to chit-chat with us, say hello, or even ask any question. Okay, wait, let me see. Like to ask about your IWDA. Which platform do you DC on? Okay, so yeah, for IWDA, actually I have two sites that I DCA on. The first site that I DCA on is mainly the IBKR site. So every month I will buy like $1,000 worth. So that's the DCA part. And I did that, like I said, intentionally is to journey with you all, especially those who are new to investing, want to do ETF, but got some questions, right? Not sure how to do it, then not sure if does it work or not. So I show that series. I think now we are episode 7 or 8. So it's mainly done on IBKR, okay? IBKR, interactive broker lah, okay? The other side I do is on the Standard Chartered Bank. Okay, I think you're local Singaporean. I mean, okay. I think Standard Chartered Bank is more than Singapore, so other countries also offer Standard Chartered Bank, I think so, depending on which area. I think Hong Kong also got Standard Chartered Bank. So for me, I also have IWDA in my Standard Chartered Bank. So occasionally I also buy some there. But mostly now, my DCA for IWDA ETF is mostly at the IBKR side. Oh, I never do it automatically. I just go in and click myself. You can set auto investing as well, but personally I prefer to just manually click. It's just my own preference, because I also want to make it a habit to log in to see my holdings as well, to check the holdings. And because I use IBKR quite a bit also, so that's why it's something like normal to me to just go in and check. So if you want it to be automated, I think you can set it as well if you want. Yeah, correct. So I agree. Actually, a lot of ETF has tracked similar components, like CSPX, basically SPY 500, that kind of stuff. And then even IWD, okay, Global Index, also tracks a lot of the top US company like Nvidia, tech companies, all inside as well. So yeah, I think end of the day, most important is the tax issue. So if depending on which country, which state you are, certain states in US they have tax-free ETF, like, or even lower tax, like 5% only, as compared to foreign, like Singaporean, you buy US ETF, 30% withholding tax. So try to understand your local tax rules. Very simple, just call your broker and ask them to explain to you. When you sign up for a brokerage account, they usually can advise you on the local tax rules. And then let me see. Many some investor. Hey, correct. So yeah, really, I can share. So I agree with Yaf. Yaf said a very good point. I can highlight to you is that any seasoned investor, okay, any good investor that has a lot of experience in the market will tell you a good ETF is still one of the best performing instruments or asset class. Even I spoke to a lot of so-called bank investor, okay, those private investor from banks. I have some friends there working all these things. They also can tell you the best instrument is the ETF. Okay, they have some rules. I mean, some people who work in banks know okay. Like you work in private investor or you help to invest. Okay, you're an investor, trader, that kind. Okay, most of them actually cannot buy individual stocks. Okay, because they say there's some conflict of interest. It's their own institution laws. They only can buy ETF. But the truth is, based on their experience, they also share with me that ETF is one of the best instrument you can have. really, really best instrument you can have. Not lying really, not cool story bro that kind, not trust me bro that kind. It's real cool, not, it's real actual story. ETF are really one of the best instrument. Anybody lah, I really feel personally, seasoned investor, beginners, all should consider as a core component in your portfolio overall. Okay, let me see. In case I miss any comment, let me see. If I miss any comment, let me know. Let me see. Hey, Fatty, nice to see you, Fatty bro. Thanks for dropping by. Good to see you again, Fatty. Hey, by the way, today is a light topic, so we will also try to keep it shorter, less than 1 hour, okay? Hey, Fatty, you know, I want to share with you, Alibaba dropped almost 8%. 8%, wow, I see the price, I almost vomit blood. Let me see, it's 8%, right? Sorry, I digress a bit, let me see. Because Fatty, our Fatty bro here, our viewer here, is an expert in China stock. Yeah, you know, Alibaba, I think Friday dropped 8%, wow, I almost vomit blood. So I was thinking, wow, really, you know, I hate to use this word, but I think Alibaba is now a stinker stock. Stinker, wow, stings, man, the stock. So, okay, I just want to share with you, okay, brief one. So China stocks, I decided, okay, next month, in 1 month's time, if my China stock cannot recover a little bit more, in fact, regardless of the price, okay, 1 month later, if Alibaba cannot go back up or the China stock cannot recover a bit more, I will cut 25% of my holding. Yeah, I decided already. Okay, well, I see the Alibaba cannot take it already. Drop 8% due to bad earnings result, right, Fatty? Correct, right, Fatty? Correct me if I'm not wrong. If I'm not wrong, the earnings result last Friday or Thursday not very good. So it dropped like 3% or 8% that kind. Wow, I really want to vomit blood. Hey, I thought Alibaba is a strong fundamental stock. Didn't know the earnings can be so-called that bad. Huh? They want to dilute shareholders? Oh, I better go read about Alibaba now. Okay, so Fatty is sharing with us, they are actually diluting shareholders. Wow. Cannot take it. Okay, so my strategy I share with you all upfront first. Next month, 1 month time, okay, if Alibaba and the China stocks cannot recover enough, doesn't show a decent amount of recovery, I will just cut 25%. Okay, I just take 25% loss. Okay, then I will still keep the 75% shares. Hopefully they can recover more, so when I cut loss, not so painful. So honestly, if I sell away 25% of my China shares in total, I will lose about, I will actualize about 10k loss, 10 to 12k loss. Okay, just to be honest. I'm still down about 40 to 50k, I never go and see. But if I actualize about 25% of my losses, actualize it, sell it away, yeah, I'll accept the 10k loss about there, 10 to 12k, move on. And then I take the money I sold, right? And then I go and invest in the ETF. Forget it, really. So just share with you all my plans. In fact, if you have any advice for China stock or any one of you have any thoughts about my plans for China stocks, let me know. I'm happy to hear from you. In fact, I learned a lot of strategy about China stocks from you. Okay, Ken, that's all. I think that's okay, so we will move on to the next part, options component. Wow, Alibaba really very painful, the stock. You know, Alibaba, I start buying in at about 230 or 240, I can't remember, and I kept averaging down. Every time I average down, right, it gets lower. Oh my god. So you also can learn this painful lesson, okay? Just because a stock keeps selling down, you don't keep averaging down. Just because it has strong fundamentals, you also don't keep averaging down. Always look at the macro factors. Look at those political issues, the macro environment, what is the government thinking about. It matters a lot. When the government keep finding their own companies, you know, prosperity law, right? Common prosperity, then the Chinese CCP, Chinese Communist Party, the China government, keep finding Alibaba, you know, back then, Tencent, fine. Then I felt that I didn't pay enough attention or never think deeper. I really never think or analyze deeper. That's why I kept averaging down, and that was my mistake. So y'all don't learn now, okay? Can learn from this painful. Don't follow this bad idea. Don't keep averaging down. Must think carefully before you average down. Okay, come. Next up, Okay, so options. Okay, so market has opened. So today I don't want to talk too heavy on option strategy because it's Monday. We want to keep it relaxed. So I share with you upfront first. Actually, I was thinking of covering LEAPS and PMCC. In case you don't know LEAPS just means long-term expiry, anticipation security, or something like that. It just means long-term expiry options contract. That's all. Then PMCC stands for Poor Man's Covered Call. Okay, I actually don't like to talk about strategies I hardly use anymore because I'm not really an expert and I'm not using it to deliver enough returns. So I usually don't talk about things like iron condor, a dragon or soldiers, a monitor lizard, straddle, all these things. I don't talk about it because those option strategy I've tried before in the past, it doesn't work very well. It doesn't deliver returns. And sometimes I lose money. So I don't talk about those strategy that don't deliver returns and I don't consistently use it. So I avoid speaking about those because I'm not an expert and it's not giving me returns. I only mainly focus on option view strategy because it has shown to consistently deliver returns. But PMCC, Poor Man's Covered Call LEAPS, I think there are some interest in it, and I think it has quite a bit of similarity to the option view strategy in terms of selling covered call. So I will cover a bit of LEAPS and PMCC tomorrow. Okay, tomorrow. So I share with you all first. In case some of y'all, I mean some of y'all message me, I talk about Poor Man's Covered Call, want me to talk a bit about it. Okay, I cannot talk too in-depth about it because I've used it before. I share with you, okay, I used it about 10-20 times in the past. Honestly, the risk-reward ratio not really there, and I don't really consistently make money, and too many factors to think about that limits my potential for gaining enough returns. Just not a worth it strategy personally. Okay, Poor Man's Covered Call, just quickly summarize, is just to buy a covered call. You buy a covered call to so-called mirror the shares you own. Instead of buying 100 Apple shares, example, you buy a covered call deep in the money. So example, you buy a very deep in the covered call, example, strike price of like $50. Then you sell all the short terms covered call against it. So it's like pretending you have 100 shares of Apple. Just pretend you have 100 shares of Apple. Instead of maybe spending like, okay, 10K to buy 100 shares of Apple, you only spend 5K to buy a covered call of Apple. So it's like less capital, right? Poor man's covered call is called poor man because you spend less capital to own the shares. And then you sell covered call against it, that's all. That's the whole idea of poor man's covered call. We will talk about it tomorrow in case some of you are interested. It's less capital intensive, but honestly speaking, I rather you buy the 100 shares and own it than to try to buy a cover call and sell short-term shorter-term call options against it. So in case you are experts in PMCC, Poor Man's Covered Call, feel free to give your inputs. I also can learn from you. And then you also can share if you're doing PMCC, what are the ups and downs. Personally, I don't touch it and I don't encourage it personally, okay. But if you're an expert, you can share your views. So we will do it tomorrow instead because it's quite a heavy topic. So I don't want to bore you all today. Monday, stress really about work. Still want to come here, listen to you pigeon bro. Talk about PMCC. Bro, don't like that leh. Very tired already. You still talk about PMCC. A lot of us don't even know what is PCC, No lah, most of us know lah. Means play Chinese chess, okay? PCC means play Chinese chess. Okay. The Chinese chess, you move the chess here. Shoo, 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 shoo. Don't worry, play finish, no liquid come out one, don't worry, okay? Okay, so we talk about PMCC tomorrow in case some of you are keen. Okay, so let me just dive into the options market now. Okay, let me just change the screen. Okay, so I've changed screen. My options contract now is on top, first page, okay, on top. Okay, so just want to give you an update. If you all look at the NVIDIA component, you all can see, let me see. NVIDIA. So somewhere in the middle below row, the cursor there, okay, NVIDIA put. Yeah, so if you notice, right, last time we have like 4 to 5 NVIDIA puts, now only left 2 put. So just an update, I remember last Thursday, right, I told you I'm going to close one of the NVIDIA put because the profit margin is like 40% already. So I took it and I close it. Because of upcoming earnings season, I think 2 more days, 1 or 2 more days or 3 more days, Nvidia will report earnings. And also because I don't want to hold another 1 year plus for the remaining 60% premiums. Not very worth it, to be honest, because I've captured 40% of the premiums. Why wait 1 year plus to capture remaining 60%? So that's why I've closed my position. So I just want to share with you all. So now you can see I only have 2 Nvidia puts here, which is a long-term contract. See, next year and 2 years later. So I'm very comfortable holding this over the earnings season, no problem. And one of the strategy I want to share with you all is when you want to trade the option view strategy, do follow your stock's earnings season. It's quite crucial, okay? You don't have to go and analyze the report, okay? Read the report, read every single word. No need. Nowadays, a lot of news website, they will give you a summary version, the earnings, the revenue, and the forward guidance. And that's pretty much all you need to know. The rest, not so crucial, to be honest. Forward guidance is one of the most important thing, and the earnings, that's all. And knowing when they report earnings is also very important. So, because you know earnings season coming, that's where your stock price and options can fluctuate volatile. Okay, the volatility is very high. So that's where you need to ask yourself, do I want to limit my exposure? If I have 10 put option, example 10 Nvidia put option, earnings season coming, and all these 10 Nvidia put position are all profitable now, 40%, 50%, or some even 30 something percent. So you have to ask yourself this question: do I want to risk it? Do I have the capability or the amount of cash flow, to manage the risk and accept the risk that potentially the earning result can be bad and my option position can turn unprofitable or even turn negative? So you ask yourself, hey, maybe I want to keep some and close some position. I want to limit my exposure. So this question, you have to really ask yourself whether your cash flow can manage and sustain that 10 option contract. If you feel not confident and you feel that, hey, later earnings season, they report bad result, I am dead, shit. So if that is a concern, do consider closing some of your position. And like me now, you see, instead of 5 Nvidia put, I only left with 2 Nvidia put. And if let's say, okay, unfortunately, Nvidia really announced bad earnings result 2 or 3 days later, so be it. Because my strike price, you see, is quite low, $130 only. Nvidia now is about $220, right? 210. From 210 drop to 130 is almost like 40% drop. Will Nvidia drop 40%? I think unlikely, but not impossible. Anything can happen, okay? Unlikely. Plus, if let's say Nvidia really crash 50%, I'm that unlucky, I don't mind taking assignment. I'm okay. It's $130 per share. I'm okay with it. It's about 13K per assignment only. So worst case scenario is $26,000 for these 2 Nvidia contract. So you can see the way how I position is, I take into the factor I cannot predict the future. I cannot predict what will Nvidia results be like. I don't know. But I manage my risk by closing some of the profitable position. So that in that case, right, when the day comes, Nvidia really crash, I'm ready. If Nvidia rocket up, no problem, I still have exposure. I still have these 2 put to profit from. So just want to share with you all my thought processes why I close some of the Nvidia puts and how I position myself to be ready for these earnings seasons. So I hope this gives you some context, like something to consider. So if you really want to do the option view strategy, selling option consistently, and then make money consistently, be it up and down market or sideways market, do bear in mind you should keep track of the earnings season. Okay, it's not very stressful, don't worry. Earnings season is only once every 3 months. And usually they will announce the date like 1 month before. So you roughly know when is the earnings season. Just remember to stagger your options and prepare your position accordingly as the earnings season draw near. In fact, live here, every time like 1 month before, right, we start talking about the earnings season already. Like Nvidia, Apple, I think 3 weeks before, 2 weeks before, we start discussing about closing position to get ready. So if you have followed us the past previous stream, you'll know that we have closed some puts, opened some new puts, and so far, We have been profitable, okay? So far we have been profitable. So let's hope we keep it that way. Okay, so that's the NVIDIA update I want to share with you. So NVIDIA earnings season coming, okay, I think 2 or 3 days, I'm very excited. I will keep you updated. Okay, so let's look at the market now. We identify any opportunities, then we can discuss. Sorry, my computer a bit lagging. Okay, come, exciting, exciting. Okay, let's look at the green part. Okay, Amazon, okay. Hey, by the way, if any one of you invest in Amazon like me, let me know. I know some of you all said that Amazon has the strongest moat in the AWS, right? Amazon cloud system or something like that. Can share some of your thoughts about Amazon. So I'm invested in Amazon, but I'm not heavy in it, okay, because I think there's some limitations as compared, like, you know, some of their online sales, their platform facing a lot of competition. Even though I know their revenue now mostly, their in thing, the biggest thing is now is their cloud. So if you have any takes about Amazon, feel free to share me. I'm happy to hear more about Amazon. Okay, Apple, okay, continue to do fine, 312, okay, and then you have some other, okay, SpaceX, okay, Microsoft, okay, up. Oh, all my 3 favorite company are green: Apple, Microsoft, and Alphabet. Later I share with you some interesting update that I have for these 3 companies. Wow, I'm very excited about them. Okay, so I think my top 3 favorite companies, okay, are doing fine. I don't think there's any opportunities for me to sell cash cover put today, but potential to close some position later we discuss. Like I say, when the stock price is down, I will try to sell options, cash cover put, because the premium is usually better. Same thing when the price goes up, I will try to close the position, because usually the premiums will also go up. So there's a difference here. Okay, just remember, stock price go down, I sell cash cover put. Stock price go up, I will sell covered call or try to close some position. So it depends. Okay, so Intel down, okay. I see what, 10 cent down again. All my China stock, okay, let me see FXI. FXI down. Well, Alibaba continue to down. Hey, fatty bro, save us. Fatty bro, save us. So our viewer here, Fatty Bro, quite expert in China stock, so we can hear his comments, okay. Gone case Alibaba, please lah, please. Okay, MG also down, FXI also down. In case you don't know what's MG or FXI, it's just basically China ETF, okay, China branded ETF. Like all the top company or mid-tier cap down there, like Alibaba, Tencent are inside their, I think 拼多多 all these things what 快手 delivery, all these are inside this China ETF, and they are all bleeding. Okay, all bleeding. I just want to be honest with you. Okay, so that's all. I don't think there's any opportunity to sell cash cover put today. SPY never dropped much. So overall, conclusion is I think the market is sideways, not really up or down too much, except China stocks. Okay, Nvidia dropped. So like I say, when you start to build up towards Nvidia earnings, right, it will start trending upwards. Then once it hit like 1 or 2 days very close to Nvidia earnings, right, it will trend down a bit. And then when Nvidia announce earnings result, let's say it's good earnings, for some reason it will still trend down a bit. It is like that. That's Nvidia pattern based on my take. Maybe because people are taking profit, so that's fine. So honestly, Nvidia, people are expecting good results, to be honest. You see the share price from like 180, 190 trend up to like 210 now. People are actually anticipating good results, which I think likely it is because of all the demands. But if Nvidia were to announce bad result, I tell you, gone case. Gone case. So Nvidia is a high risk stock, to be honest. High risk, high return stock. Can potentially make you rich, but also make you poor. If Nvidia announce bad result, I tell you, really gone case. I won't be surprised Nvidia can drop 20% in one day. Okay, so be prepared if you are investing in Nvidia. Okay, so let me go back to the option component, see if we can close any position today. So by the way, if you also have sold some options, share with us also, okay? I hope everyone is making money. Okay, Apple, my Apple put all go up already. Okay, let me see. Okay, I shift screen a bit so you all can see, okay. So I shift to the right a bit so you can see the profit margin. Okay, okay. Okay, let me see. Oh yeah, so you can see our Apple puts. The first 5 row is mainly Apple and Apple put. So we are profitable, is it? 9%, 25%, 19%. So we sold this put together, right? If I'm not wrong, I think like 1 week ago, 1 week plus. So we are up about 10, 15, 20%. So it's not bad, not bad of a return, right? Okay, let me see. Okay, so you can see, okay, maybe except, okay, now you can see the lowest row there, the SPY put that I highlighted. Okay, first picture I highlighted. Okay, somewhere close to the bottom. Yeah, SPY put now is still 41% profit margin. So same thing, SPY put I'm targeting 50%. So we will wait a mile more. So I want to emphasize here, share with you one very important thing. Very, very important thing. You see all the green color column, right? It's all the profit. It's very tempting, to just close it and collect the money, right? You see the amount, $2,000, $1,000, $700, $200. It's very tempting to just close all the position and collect money, right? So remember, patience goes both ways, be it not being greedy and also being patient enough for the option to hit your targeted profit margin level. So you must be patient here also to wait for the option to turn more profitable. So not just because like 13%, 20% profit margin you close. There's nothing wrong with it. Taking profit is never wrong, okay, never wrong. But remember to do the option strategy, the option view strategy well, you also must be patient enough for your position to accumulate enough profit before you close it. Why? This is all about risk versus reward ratio. You don't want to get really so much money, standby money, sell all these options. Remember, when you sell options, you are taking on risk. Okay, you are at risk of assignment. You want to have a good risk reward ratio also. Why do I want to take on so much risk and then I get like 10%, 20% profit? Not very ideal, right? You want to at least be a bit more patient, get a bit more return, like 40% or even 30+% if you're afraid of upcoming earnings season or macro news. So that's why you also have to be patient, not just slowly make money, but also be patient enough to let your position build up more profit before you close it. Okay, so I want to emphasize to you all, patience is very important in the option view strategy. Very important. Remember, we want to consistently keep making money. Okay, consistent is the keyword. So be patient enough for your position to hit your targeted profit level. So SPY put, we are targeting 50%, so we will wait first. Okay, so today honestly I don't think there's any position for me to close, so we will just stop and we will just monitor. So I see how maybe the next few hours there might be some changes, then I see whether I can close any position. So if I were to close any, I will update you all tomorrow. But for now, I share with you all my plan is that I don't think there's any potential position to close today. And for cash cover put, I also don't think there's any position for me to open. But I see how, like I said, I don't trade during the first hour, maybe the second, third hour, then I monitor. Remember, option view strategy doesn't mean you every day must sell options. You don't have to sell options every day to do well. There are days where you do nothing. Sit back, relax, go to 7-Eleven, buy some drinks or sandwich, and then enjoy the night, okay? Okay. And then, okay, I chit-chat with you all first before we close the session, okay? Yes, sell 25% BABA, use the money to invest and compete the profit versus the remaining 75% BABA. Oh, a good point. So, I think Yaf is highlighting, let's say example, I sell 25% of my China stocks overall, okay? I will try to sell some Alibaba, some Tencent, a mix, okay? So I sell 25%, I get back the capital. So if I sell 25%, I will probably get back about 10k plus minus, okay? Maybe a bit more, maybe 12 or 13k, since my loss is now about 40%, okay? I think I lost 40k. I can't remember, okay? So I actualized 25% of my loss. I can get back about 10K or 12K. Let's just say 10K, okay, 10K capital. Then I put this 10K into an ETF, example ETF, or let's say SPY 500. Then I see, if this SPY can give me better returns over the next few years and even compensate my loss. Hopefully, yeah, I really hope this is the right decision, cut loss, take loss, then use the money, invest in an ETF. Hopefully, enough return to compensate back my China stock loss. Sell 25% if all is good. Yeah, correct. So hopefully, months down the road, okay, maybe next month I sell 25%. Then hopefully, 3 to 6 months later, the remaining 75% of my China stocks can recover a bit more. Okay, if it can recover more, I will just sell everything. Okay, because I don't want to take such a huge loss immediately. 50K, 40K loss is a bit heavy. So maybe I take 10K loss first next month. I actualize it. And then I monitor. Hopefully the loss drop to like 20K or 15K. And then I sell everything. Okay, then I'm done with China stocks. Let's see what other comment there is. Okay. Our fatty bro here sharing with us China stock comment. Let me see. Okay. Wait. Strike price too. Okay, wait, hold on. Sorry, give me a while. I read our bro's comment here. Fatty bro. Actually, China not doing as well as you think. I have some relative in China that want to come out cannot get the F out. Oh, okay. Thanks for sharing. Okay. So Fatty actually has some relative in China. Like it seems like China not really doing as well as we think. Because sometimes we watch China YouTube video, right? Like Shenzhen, all the high tech, all these things, all the technology. Seems like their economy is quite okay. Maybe they are not doing that well also. Okay. I don't trust bank products cause my colleague Y. Their department is still approve those. I don't trust bank products. My colleague Y work in an investment firm, won't say which their department job is to approve those investments. Honestly, a lot of bank products, right, their investment product are actually not good, to be honest. So I actually agree with that. If you know about stocks yourself, you will know that you can invest in an ETF and do better than that. To be honest, buying bank products, or to be honest, investment product, is really to let them earn the commission and hopefully give you a bit of returns that enough to cope with inflation, that's all. Maybe like 3% return, then the remaining is fees for them. The side effect of doing this is just to get personalized service, to be honest. Sometimes you buy all these products is to support the relationship manager, okay? Give them a bit of fees to earn, okay? Then you yourself get a little bit of returns, but to enjoy their banking services, like personalized. Maybe you need fast forex exchange or some checkbook, whatever, I just feel personally, bank products, investment products are bad, are terrible. Okay, they are designed in a way to make themselves rich, which I'm okay. I think as long as their product don't make you lose too much money, or maybe give you a bit of return like 2 to 3%, like a savings product, then they themselves collect the money as fees. Then you get some personalized bank services, like come to your side, help you to do banking service, or you're a businessman, or you are huge high income earner and you want some of good fast banking services like good forex rate, all these things, or cheap loans. If you are a very highly favored customer, I can tell you, ultra high net worth, right, your loan can be as low as 1 to 2% one. To be honest, okay, common folks like us, we go loan from bank, 7% interest, 8% interest, 6% interest. But you are ultra high net worth, you buy a lot of products for them, they can give you very favorable loans like 1% or even 0 point something percent that kind. It's like a kind of favor, the kind of returns. So personally, I will not touch bank investment product or investment firm, to be honest. So thanks for sharing, Fatty. Thanks for sharing. Yeah, correct. So Fatty is sharing with us, okay, a lot of those people who work in banks, be it insurance agents or investment firm, they don't understand the technical stuff, which is true. Even a lot of relationship manager, okay, work in bank one. Or worse is those financial agent or insurance agent, those are the worst. they really don't know anything about investing one. They really don't know much about it. Okay, the technical aspect like what we talk about here, they don't understand. Their job is to sell you products, not to sell you the technical skill set. So that's why they only know how to spam you products. Okay. Okay. It's only after I introduce teach the view, the wife understand the component of the product. Okay. Okay, their whole department don't know about product. Okay. Yeah. So overall, thanks for sharing, Fatty. So our viewer here is trying to tell us a lot of people work in the banks, sell products. They don't even know the actual products component, be the view strategy, the content. That's why I hate to say when I went to examine all the ILP investment link policy, a lot of their instruments are very high risk, I see the portfolio they built, all the random company I never hear before. All are very high risk. Some China stocks or what, some maybe overseas stocks that unknown one, extremely high risk. I think even some India stocks I don't know. So all these products they market it as investment link policy, but very high risk. And the insurance agent can't even explain to you all these things. So something for you all to consider when you want to buy products, all these things. Not financial advice, I'm not qualified to tell you all what to do, okay, but just to share with you all my personal knowledge that if you want to buy all these investment products, insurance products, please read carefully and research carefully and know what you are getting yourself into before you buy into it. Okay, let's come back to options, okay? Wow, Baba cannot say what you like that say means I gone case already, Okay, can. Yeah. Okay. So CSP last week, 30 DT. Okay, straight, solid. Okay. Yeah, so one of our viewer here, okay, like I said, Fatty also sold some cash secure put or so-called cash cover put for 30-day DTE. Meta, he sold on Meta. So maybe he's into Meta. Okay. So Meta also is quite a good stock to sell options on. Only if you like Meta, okay? Only if you're into Meta. Remember, only sell cash cover puts on stocks you want to own because you will get assigned one day. Bank's first interest is the bank itself. Hey, yeah, you are correct. Remember, banks is not there to help you earn money or save money. Their interest is always themselves first. Okay, nothing wrong with it. Okay, nothing wrong with it. They want to make money. I respect that. Okay, so just remember that. A good point, their first interest is always themselves. AI in banks, accredited investor, you have access to better return products. I think it's true, but I still feel even you have better products, I think to be honest, stock market can still give better return. That's my own take. Because banks, right, when they sell you products, they need to earn money. Okay, they are not going to help you farm, make returns and give all back to you. They are going to charge you a lot of fees, not just 1%, usually like 3% or even 4% fees, because they need to keep their priority banking centers running, their offices running. They need to serve those high net worth customers with chocolates, tea and coffee. They are not free. They are not free. They come from your purchase or commissions. Correct. Yeah. So I think one of the advantage of being an accredited investor, that time I spoke to them, they told me I can get a cheaper loan, like 2% interest rate, that kind, plus a floating rate because they want to earn from me as well. So you end up like 3% or 2.5%, which I think still not as good as those ultra high net worth that can get like 1%, that kind of stuff. Don't know why people trust them so much also. Yeah. So to be honest, people like us, especially if you are in this chat, okay, in this stream right now, I think we are actually very fortunate, to be honest, because we are actually exposed to investing. We know that actually all the bank products, investing, all the insurance agent investing product that they sell actually sucks, to be honest. But the truth is a lot of people out there, 90% out there, still are not aware about investing. They don't know how to invest. They don't know the ins and outs. That's why they think they have this thought that bank is the best. They are professional. They can help me manage money. They will take good care of my money. Actually, to be honest, the best person to manage money is you yourself. Or unless you have a very trusted friend or family that is an expert in the stock market, can help you do this. If not, right, bank's interest is always themselves first, not you. Yeah, so I'm glad we are here in this stream, okay, that we know the market well, we know about investing, we even know about ETF, that, come on, man, a lot of us here, let's be honest, we will tell ourselves, hey, even if I just close my eye, buy an ETF, I can get way higher return than the stupid bank products, which is the cold hard truth. But a lot of people don't know. They think that buy ETF high risk, then they see the ETF drop, wow, they scared. They don't know who to call, who to ask for help. They need someone to confide in. Like the stock price drop, they panic. They don't know what to do. So if they have a investment agent, at least they have someone to emotionally support them. So maybe that is what they are looking for. So for those who are here in investing, we are very good, okay, very fortunate that we can avoid all these very bad products, crappy products, and we can do well ourselves just by buying ETF, just by buying ETF. Okay, Ken, next up, when the bank try to sell me product, ask them if they are financially trained. Which school teach them to invest through? I've given up talking to some of these agents and some of these investment bankers, so-called, they sell products, not the technical department, but the sell products. Most of them really don't have much technical knowledge. Their job is to sell you products, not to explain to you all these things. When I ask them about like, hey, ETF, wouldn't it give you a better return? They cannot explain. And some of them don't even know what is an ETF. They don't even know what is ETF. I was shocked. I was like, ETF. Okay, Ken. Okay, Ken. That's all. Okay, actually, there's a last part, okay, but I will cut the last part away because it's 10 o'clock. We end the stream here. But I want to share with you one update is, so I came across one interesting idea. It's called a bingo card. You all know bingo, right? It's a square that have a lot of components. So I'm going to do a bingo card together with you, okay? Probably I come up with some component first. So some of the bingo will be things like SPY will become $1,000. Then maybe another square, the bingo card will have Apple will double up. Then Microsoft will hit $1,000. So we have a bingo cube, okay? I'll do a bingo card. Then we will monitor this bingo card for like 5 years. So if 5 years time, we hit all the squares, maybe we can throw a party, okay? Maybe we throw a party for you, okay? Maybe I throw a party for you. So the bingo card, maybe we see how 2 to 5 years time. If all the bingo hits, every square we hit, like Microsoft double up, Google hit $2,000. 5 years time, if everything really hit, I think we can throw a party, okay? Throw a party for all of you. Then we can have a chit-chat session, eat all the food. Sponsored by me, okay? I sponsor. So we just have a party and enjoy ourselves, okay? For our close group of people here, okay? Just enjoy ourselves. So the bingo card is something I thought of, like, quite interesting, maybe you all can share with me what are the things I can put in the bingo. So it's for the stocks. Okay, hey, that's all. I don't want to hold your back, it's already 10 o'clock. There are some other things I want to talk about, but we will do it tomorrow. Today, like I said, it's a more light-hearted session. We just chit-chat like that. Then we will have a more intensive session tomorrow about the LIPS and poor man's covered call. Hey, so thank you so much everyone for dropping by. Like I said, if you're here, please feel free to say hello. We can chit-chat with you all. So good to see you all. Nurislam, Yaf, happy to see you always. Azam, and also Fatty bro, always good to see you, Fatty. Thank you so much for dropping by, everyone. Thank you so much. So I will see you all tomorrow. We always stream Monday to Thursday, 9 p.m. Time zone is GMT +8. So thank you very much, everyone. Goodbye and rest well. Hope work is okay for you all tomorrow. Goodbye.